I'm Sebastian St James. These are the fastest growing stocks on the ASX right now, and today I will reveal them to you. But this information is strictly on a need-to-know basis, so who is asking? In a previous video, one of my viewers asked, oh, hang on, what's all those red marks? This person's name seems to be redacted. Well, that's very unusual. Is he a secret spy from ASIO whose identity must be protected at all costs, and failing to would breach national security? He could be. I don't know. I didn't ask. But he did ask me not to use his name. So redacted is what he'll be. But he does have a gold medallion beside his name with the number 2 in it. That's interesting. I wonder what that could mean. That means that he's one of my channel members and he's been with me for 2 months. Mr. Sebastian, it appears you cannot be coerced with money, which is the only thing I have to offer. Well, this is true. I'm beyond reproach. I'm like a high court judge. I cannot be bribed. Surely a dodgy email address wouldn't hurt? Do I have a secret email address that you can contact me on? I'll give you all my latest tips. No, no such email address exists. I think that redacted may be a secret spy, trying to extract state secrets from me. Yes, it's all making sense now. Well, I will ask you online if you don't want to come to the party. Aha! I forced the secret agent out from the shadows. By the way, do you ever tell the truth about yourself? Or only about your brilliant help support for the markets? Is your real name Sebastian St James, or is that just some stage name that you made up? That's my real name. My mother sometimes calls me Sweetie. Do I have to disclose that? Do you accept bribes? No, I don't accept bribes, but I do like those free samples that they give out at supermarkets. I can't resist those. What is your secret email address? Come on, I know you've got one. I don't have a secret email address, but I can give you out Sharon Stones if that will help you. Tell me your secrets. Tell me now, or we'll start this over from the top. I've got all day. Okay, I've had enough. I will tell you everything. I'll reveal my secret. I shop at Woolworths, and this is a Woolworths shopping bag. Redacted, do you have any portfolio ideas? Well, yes, I do, and that's what this video is all about. So what are the fastest growing stocks on the ASX today? We're going to talk right now about momentum stocks. With momentum stocks, there are several different ways of defining momentum, sometimes also called trend following. Some people will use the word momentum and trend following to mean two totally different things. Others kind of intermingle them. I will explain all the differences in a future video. Today we'll focus on one way of defining momentum, but in future videos we'll cover all the other ways of doing it as well. To get the concept of momentum, there's one thing you need to understand first. That is efficient market hypothesis. In the past, information was limited to those in the know. Well, that makes sense. There was no internet back then. And companies weren't required to disclose as much information to the market as they are today. Full disclosure rules tend to be getting better over time, but you go back a few decades ago, not so much. In the past, let's say you were an investment manager and you wanted to invest in, let's say, BHP. What you do is you get the CEO or the head of mining operations, take him to a fancy restaurant, and during the fancy lunch, they'd ask him some series of questions, get him to spill the tea. Today, we'd call that insider trading. Insider trading is the trading of a public company's stock or other securities, such as bonds or stock options, based on the material, non-public information about the company. Material here means significant or important. This does not mean it does not still go on to some extent, but yeah, basically now it's illegal. So, with the efficient market hypothesis, it's a hypothesis that states that the share price should reflect all information that's available. If it's true that full disclosure rules are actually implemented, then anything of material value should be disclosed to the market in the ASX statements. That's what they're there for. So all that information is now available to everybody who may be interested, and immediately they trade on that information. Were the earnings good this year? Oh, quickly bid up the stock. Are we expecting a cut in our dividend next year? Oh, bid down the stock. All that information should be immediately reflected in the stock's price. And that is the basis of the efficient market hypothesis. If a stock price goes up, the market has decided the stock is worthy because all information is known by the market. If a stock's price goes down, then the market has decided it's unworthy because people have voted on the stock and decided there is a problem with it, hence the price goes down. Now we know about the efficient market hypothesis. How does that affect momentum? Well, momentum asks, what shares have gone up lately? And it ignores the fundamentals. For example, profit, sales data, all those good things completely ignored. We just look at the momentum of the share's price. But isn't profit important? Don't you talk about profit in video after video? Well, yes, I do. But if Elon Musk is about to buy your social media company, the price will be immediately affected and you're going to know about it. No, wait, that became a different video. While in reality, the fundamental things, which are sales, profits, dividends, things like that, do actually matter, the efficient market hypothesis says they're already included in the stock price. We are factoring them in already. So as a momentum investor, you can say the following. Fundamentals are below my pay grade. The stock's price trajectory already reflects that. If the momentum is up, then the market is not predicting anything bad for the stock in the near future. So in theory, it should be fairly straightforward. Buy stocks which are going up because the efficient market hypothesis says that the people, those who are voting with their buying and selling, have found no problems in the stock. All the knowledge is known by the market. The market says the stock is good, therefore you can just go ahead and buy it. That is the theory in a nutshell. But can I also check out what's going on underneath the hood? What about the fundamentals if I particularly like them? Well, yes, you can. You can combine two strategies at the same time. So you could say, what stocks have a good momentum? And from that short list, you can analyze those stocks for their fundamentals. So you're combining both strategies at the same time. But you don't have to. You can ignore all the fundamentals and just go straight momentum. It's certainly a choice. There's no reason that you have to combine two strategies. Now, there are various types of momentum. There's cross-sectional and there's also time series momentum. That could be an entire video on itself, so I will discuss all that later. For now, we want something simple that everybody can understand, so let's get into a simple momentum strategy. Step number 1, select the best performing stocks over the last period. For example, you could use 12 months. Step number 2, hold a basket of stocks. The more, the better. So because we're not actually stock picking here, this is like a blind portfolio pick. You're basically mechanically trading, then the more stocks, the better. You're basically trying to create an index fund. Step number 3, reassess your stocks periodically, for example, once a quarter. Step number 4, change your portfolio to reflect the new momentum list. So I hold these stocks here. These are the new ones. Which ones do I have to change? So essentially you are creating an index fund. The rules for it are the top stocks, the ones that have been performing best over the last year, and you implement those. With a traditional index fund, it's based on market cap. Here, you're basing it on momentum, but basically the rules are all the same. Here are a group of stocks, A, B, C, D, E, F, G, H, I, and I can see the returns, right? 4%, 7.5, 9.4. Let's sort them based on performance, and we see MNO's up the top with 21%, GHI is next, and PQR is next. I see. So here is our mythical market, and we're going to create a momentum portfolio. How many stocks am I going to hold? Well, for this example, we're just going to hold 3 stocks. That's it. It's just an example. So we buy the 3 best performing ones off the list, which is MNO, GHI, and PQR. You hold those stocks, you pay no attention to what's going on for, say, a quarter, a period of time. Oh, it looks like GHI, oh no, you've hit the bottom with minus 6%. So we sell off GHI, that's no good to me at all. Who's the next one? I own MNO, I own PQR. Okay, DEF I don't own, so I'll go ahead and buy that. So it's fairly straightforward. You rinse and repeat. You hold the best performing stocks, go to sleep for 3 months, and then have a look at the list. All right, and then make appropriate changes. And that's the basis of this particular momentum approach. Good. So let's get started and put that into action right now. So here is a potential ASX momentum strategy. Let's go. Step number 1. What are the highest performing stocks on the ASX over the last year? That'd be the typical period, but you could also say 2 years or 5 years. So here it is. Out of the entire ASX market, these are the best performing stocks over the last 1 year. At the top, we have WYX, Western Yilgarn, with a 12 months return of 4,400%. Wow! No wonder you're at the top. Number 2 is VSR, Voltaic Strategic Resources. Its return, 3,200%, another very good performance. SVG, Savannah Goldfields Limited, 2,913%. These are very, very impressive numbers. But what stock size are these? Are these little micro caps that suddenly shoot up? That seems like an awfully large return for a large company. So the next step is this. Restrict the universe of stocks. You know, it's optional, but you can certainly go ahead and do it. Do you want to exclude micro caps? Let's say only include stocks which are greater than $500 million. So that's what I've done. These are the best performing stocks that have a market cap greater than $500 million. Number 1, TER, Terracom, has a return of 478%. Okay, so we're not at the 4,000 mark. We've come back down to earth at 478%. Whitehaven Coal is next at 297. That's actually a large cap stock. New Hope Corporation is 209%. And Yancoal, these are all coal stocks. I'm recognizing this at 209. Right, we got rid of the micro caps. It certainly made a change. Perhaps we'd like to go even further. So you could say, do you only want large cap stocks? And let's say stocks which have a market cap greater than 1.5 billion. So let's go ahead and do that. And here they are, the best performing stocks over the last 12 months that are large cap stocks. At number 1, WHC, Whitehaven Coal, with a total return for the 1 year of 297.8%. Wow, okay. New Hope Corporation is 209.8. Yancoal is 186. And as I look down the list, coal, resources, energy, yeah, that's basically what they are. So if you want to know what's been performing well on the ASX lately, that's your answer right there. So which list should you choose? Should you choose the bigger list or maybe include some of the smaller stocks? The choice is yours. With momentum itself as a principle, it really doesn't matter. Step number 3, choose your portfolio size. That's the number of stocks which you're prepared to hold. So for example, you could hold 10 stocks, 20 stocks, 30 stocks. The choice is yours. But think of this like an index fund. You're not actually stock picking here. You're not going through and looking at the fundamentals of any particular stock. You're just buying a whole basket of stocks based on how well they're performing. So the more stocks you hold, the more reliable this method will be. Step number 4, buy the top stocks. That's fairly straightforward. Step number 5, choose your holding period. Your holding period is after you buy the stocks, you go to sleep for a while before you look at the next list. So that could be 1 month, it could be a quarter, it could be a year. Typically it's a quarter, but really it's totally up to you. What are the advantages and disadvantages of each? Well, if you think that your stock is going to have problems, then a shorter period of time makes sense, like a 1 month, for example. But you could end up churning stocks. Maybe a stock goes slightly out of favor, so you sell that at the 1 month mark, only for the next month down, oh, it's come back up again, and you buy it again. So churning costs money. In Australia, it will typically cost in brokerage fees, but also there will be the spread between the buying and selling. Every time you go in or out of stocks, you may have to pay that spread. And that's a fee itself. After each period, modify your stocks to reflect the new list. Sell off the non-top stocks that you're currently holding and buy the new top stocks to replace them. All fairly straightforward. Step number 7, remember you are running an index fund. The individual performance of any one stock that you hold does not matter. It will be dealt with at the end of the period. Let's say you buy a company, you're holding it at the moment in your portfolio, and there's breaking news. The CEO has been cheating on his wife. The company's stock is going to hell in a handbasket. I'm sorry for the strong language. I don't often use the word handbasket. So what do? Do you quickly sell the stock? This is a mechanical trading system. It's like an index fund. Would IVV suddenly sell out of a stock because of some rumor about a CEO? No, of course they don't. They choose a stock and they only review it once a quarter. And therefore, you do exactly the same. The question is a momentum strategy right for you? Well, here's some questions you can ask yourself. Do you agree that all current knowledge is priced into the stock? That's the efficient market hypothesis right there. Do you fundamentally believe that that is probably true? If not, then you better look further into the stock. Go back to fundamental analysis. If you believe that, basically the knowledge is out there, everybody more or less knows the same thing. The experts may know a little bit more, but they're trading the stocks. Their knowledge is affecting the stock price. Therefore, it's the efficient market hypothesis. Do you want a simplified approach without having to analyze each stock? In that case, the momentum strategy is absolutely brilliant. No analysis is necessary. Are you prepared to hold a sizable basket of stocks? How many is not really defined, but if you're only going to hold, say, 5 stocks, that's probably not enough because you're not actually looking into the stocks. Anything can happen to the stocks. You want the power overall. It is a group strategy and the success will ride and fall on the entire basket. Will you not panic if the market goes bad, and will you follow the strategy all the way through? I mean, that's the basis of this. The basis is that you've got a concept, you believe in the concept, and you execute it flawlessly. You do not get to make discretionary trades throughout. Now, what you can do is you can divide your portfolio into a number of groups. So you can have these stocks, which is the momentum strategy. It operates by the law. And second to that, you can have some other money which you use for your discretionary trading. It's not necessarily all or nothing. Do you like the idea of running your own index fund? Because essentially that's what you're doing here. If you're saying yes to these things, then a momentum strategy could be something that you can consider. On the other hand, if you don't like to be hands-off with your shares and you want to get into all the fundamentals, then things like the company profit really matters. In which case you'll be asking yourself the question, what are the 5 most profitable stocks on the ASX right now? Click here to find out.